Welcome to topic number 2, which is the recording process. Accountants have constantly referred to the concept of double entry accounting. Double entry has its origins from the year 1494, when Mr. Luca Pacioli, an Italian priest, developed the concept of bookkeeping, where every transaction is recorded as a debit entry and a credit entry. In the old days, they used a T account, where the left side was called the debit side and the right side was called the credit side. So for every transaction, it would create a debit entry and a credit entry. A simple entry would have one debit entry and one credit entry. A compound entry could have many debit entries and many credit entries, or many debit entries and one credit entry, or one debit entry and many credit entries, such that at the end of every transaction, the sum of the debits will equal the sum of the credits, such that the equation or the accounting transaction is in a state of equality, where debit will equal credit. Now, students should be familiar with what is an accounting equation, and we have done some transaction to confirm how transactions are recorded into the various components of the accounting equation. Let us move on to the subject of the debits and credits. We have rules to follow. Assets will always have a normal balance of debit. Liabilities will always have a normal balance of credit. So if you know assets, you have to know that liabilities are the exact opposite of assets. So when I record an increase in asset, I show it as debit. If I record a decrease in asset, it is shown as a credit. And liabilities are the exact opposite of assets, where an increase in liabilities are shown as a credit and a decrease in liabilities are shown as a debit. We come to the last part, which is equity. Equity, as I told you before, has 4 parts: capital, drawings, revenues, and expenses. The capital account increase will always be credit. The drawing account will always be debit. The revenue account will always be credit. And the expense account will always be debit. So if you look across, the sum of all the recorded debits and credits at the end of the period will ensure that debit equals credit. So to summarize again, students need to familiarize themselves with a slide that shows you the normal balance, and the direction of the arrow in blue indicates the normal balance at the end of the period. The direction of the arrow going down shows the opposite. So to recap, asset increase is debit, asset decrease is credit. Liability increase is credit, liability decrease is debit. Equity account, capital account increase is credit, drawing account increase is debit, revenue account increase is credit, and expense account increase is always debit. So once the students have understood the debit and credit rules, you are well prepared to do recording of entries using the double entry system.